Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you on this Wednesday. This is our new time going forward. Every so often, we actually change the times and maybe the days. So normally this class had been at 3 p.m. Eastern, and we've moved up to 11 a.m. Eastern. So this is our set time now. So just put it in your calendar. So we welcome all of you and good morning to you. We got Bill with us, Kelly, Greg, Gary, Marala, and Amanda, Silas, and many others. Good morning to all. Just real quick as we get started, remember you can follow me on X. Do post educational content and announcements. So like, why would I be on X? Well, I posted the announcement that I'd be teaching at this time. Then I gave another reminder last night, things like that. So that way you could actually be updated as far as what's going on and also some educational examples as well. So join us actually on X. You can follow any of us coaches there. Now, just real quick as we get going, remember the information here is provided for general informational purposes only, should not be considered an individualized recommendation. Also remember that Schwab does not recommend the use of technical analysis as a sole means of research. Hence this class, where we actually look at the fundamental analysis, kind of see what's driving the company. Also remember when we talk about examples, we will do those in the Paper Money software application. And we're going to do that for educational purposes. Make sure that you're practicing alongside with us in the Paper Money account, okay? That way you could actually kind of have a follow through of what's going on in some past examples as well. Now, also remember when we talk about if we bring up dividend paying stocks, remember that those dividend paying stocks, they may reduce or stop paying dividends. What that doesn't say is they could increase the dividend. And also when you talk about a cash dividend, there's other things like stock dividends and so on. There's a lot of things that, it's not just about cash dividends. It could be a stock dividend or a special dividend. So be aware that it's not just about cash dividends, okay? And then that could actually change over time. This is not a fixed income type of product. And so be aware of that. Also remember that investing involves risk, including loss of principal. Now, quickly, remember, if you go to schwab.com/events, you can see some of the upcoming events that we actually have. Example given, we're going to be in Anaheim at the Market Drive, known as the Market Drive. It's a one-day event, and that's actually November 22nd. So if you're a Schwab client, you live in the area, traveling to the area, join us, right, the Anaheim Marriott. Also, we're going to be doing a two-day event. First day, technical analysis. Second day, really the option strategies on the 12th, the 11th and 12th of December. That's going to be in Houston at the JW Marriott Houston by the Galleria. Also, if you're on East Coast, okay, we're going to be doing advanced options live. That's the 19th and 20th. Okay, so check that out. And so you could also go to schwab.com/events to sign up for that. It's free if you're a Schwab client. And also give you a heads up, you can see other events coming up in 2026 as well. Now, just real quick, we're going to kind of talk about where the markets are this morning. So exciting. It's this morning. Normally we talk about the afternoon, the close. We'll talk about kind of where the markets are, sectors. I want to take a look at some of the Dow stocks, NASDAQ, S&P 100 stocks, and then intermingled with that, when we talk about some technicals and fundamentals on those indexes, we're going to also talk about some past positions in the Paper Money portfolio as well. If you have questions, go ahead and talk to me, okay? So do not hesitate, okay? So let's go. Now, by the way, as we go through some things, if you have some questions, just type it in the chat, and I'm going to be watching. I got two eyes for a reason. Now, this chart, I want to kind of pull up a little different way that we normally look at the indices, okay? Here we got actually the NASDAQ. I'll share this chart with you in just a moment. We are on really the second to last grid here of what we call the package, okay? And what you're now going to notice is, I think BJ was having a little fun with me saying, do you ever get sick and tired of trend 3? No, I don't, okay? I mean, if BJ, if you're asking, no, I don't. One thing that's actually been significant is when we get the purple and or orange colored candles, we've really seen short and shallow pullbacks. So if we actually see green and then we only go orange, we know there's actually that's a shallow pullback, okay? Then we actually go green again, think pull, we got orange and purple. That's kind of more of like a medium pullback. You get a little green again, and you're going to see that it goes purple. Now, why does it go purple versus orange? If you go purple, it actually means the price fell down below the 10-period exponential moving average. If it only goes orange, the price is up near an area of resistance. It's a shallower drop compared to a purple color candle. And if you look over the last couple of days, what you're going to notice is just really green again, okay? So BJ having a little fun with me, just kind of testing to see if I get off on that soapbox. But no, BJ, no, I don't get, it's not old. Now, the one thing that has been interesting is when you look at the 10-day exponential moving average, which is not as weighted as a whole moving average, the intraday lows tippy-toeing all over that 10-period moving average. Now, why do we use the 10-period moving average? Well, if you're trying to track momentum, that could act like a shorter-term support level. That's why, okay? Now, let me share this chart with you. If you say I don't have that, let me just share it with you. I'm going to share with you the grid. And if we actually also go back, what you're now going to notice is there it is right there. Now, when you actually bring that up, if you go to Setup, Open Shared Item, so very top right, Setup, Open Shared Item, and then just copy and paste that back in. Once we copy and paste in what I sent to you in the chat, which I will also put in the description for this video, we're going to click on Preview and now just import that. Once we do that, now what you're going to notice is we got these multiple charts. Well, when we do this and bring this up, how do you actually get it to one chart? Simple. Click on the three pancakes or lines, click on that, and now just go down to maximize sell. Okay, now notice there it says the package, forward, back, forward, and if I go forward, it's rotating through the other charts there. Okay, you save it, go to style, and we actually go save style. If I actually say save style, we're going to call it BJ. And now what you're going to see is save. Where did it go? And we're going to see that load style. And there is BJ. Okay. So that's how you put it on. Now, I went over that because there's been some questions that you let me know on the feedback. And I just want to make sure, like, hey, someone had trouble or a couple people had trouble loading the charts. That's how you pull it up. The other thing I want to kind of bring up just real quick, let's go back to that. Now, do you have to start on this chart? No. I'm going to go to this chart for just a sec. Let's go maximize grid sell. Now, what I'm going to do is I'm going to pull up just real quick the SPX as well. The SPX, if you look at that, 67.43. That was a new high yesterday. You take a look at the NDX. You pull that up. That's a lot of green candles. Okay, that's a lot. And now now, by the way, these candles are not your standard candles. These are trend candles. Okay. So it's telling us where the stock is, in this case, the index is, in relationship to the moving averages. And if you take a look at the Russell, you're going to see that's where it is. The Russell still has kind of been a little bit choppier. It tends to be a little bit more volatile. That's nothing new. The one thing I want us to kind of keep an eye on today that's been a little different is $DXY. Now, historically, the US dollar has actually been dropping, but could we call this a reversal today? Well, if we go back and look and see where the last high was, right there, you actually see in this case that the US dollar actually made, and this is a shorter term higher high. So you want to kind of be thinking about, hey, if the US dollar actually went higher, what could be going down? What tends to have an opposite correlation to the US dollar? Now, we know that actually as the US dollar has been going down, there has been an opposite trade going on, which you know what that is, and I won't even go there. But you're going to see as that has declined, something else has gone up, or something else has gone up, okay? And boy, has that been interesting. If you don't know what I'm talking about, should have came to class earlier, okay? There's been some very big trends off that, especially if correlation. Just quickly, when we actually look at the SOX, which we're going to point out just for a second, SOX, when we actually look at the 10-day exponential, it's still, I mean, first off, the line, the incline of that blue line has been like a 45-degree angle, okay? Now, I don't know what it looks like to crash up per se, but if someone said this crashed higher, I'd believe it, okay? When you get a 45-degree angle moving average line, it is a very steep move in terms of momentum and trend, okay? Now, I want to go back to just real quick. Now, let's go back to this. Let's go forward, and let's kind of go back to a normal chart. So this chart, whole moving averages. Whole moving averages more weighted than the exponential and simple, okay? This is not a 10-30. This is a 10-20 period moving average. There's the 10, and what you're going to see is this is 20. Do you have to have the 20? No, you can move it to the 30. But our moving averages, we tend to want to have less lag in where the moving averages are in relationship to the price. Now, if you say, I don't like something that sensitive, shift it, okay? Move it to 30, okay? Simple to do. Now, let's kind of talk about some of the things. If I were to ask you a question, let's just imagine JP and me were together. Janelle was there too. James was there too. Kelly was there. And we're just talking as friends, okay? And I said to you, hey, what are some of those Dow stocks that are getting a move? And are those Dow stocks, are they just up for the day, but in a downtrend? Or are there actually some stocks in the Dow that tend to be liquid that could be setting up technically, but also have a fundamental backdrop to them as well? Kelly, what would they be? JP, what would they be? James L., what would they be? Now, by the way, some of you else could chime in on the conversation as well. Well, if we take a look at this, so one of the stocks that we've been kind of watching, okay, is UNH, okay? Don't even meow, get into kitty cat. But if we take a look at, let's say, UNH, this has been one that kind of had that on the right-hand side. Now, first off, before we even look at the chart, okay, United Healthcare Group. When you kind of think about some of who are the big companies out there healthcare-wise, insurers. Now, if you kind of think of that, United Healthcare, if we said put all the insurance companies in a pie, healthcare companies, who actually has the largest number of clientele? Now, I don't know the answer to that, but you might say United Healthcare actually might be up there. So they actually have the networks of people. They already kind of have the employees. They already have a lot of the infrastructure and so on. It's just kind of the matter of like clicking it off, so to say, and how profitable can they really be? Now, what you're now going to notice is United Healthcare. They had the CEO that was killed. They had some, I believe, some accounting irregularities that kind of brought some investor nervousness about. Right, they had a lot going on, and the stock went all the way down to 230. The stock since that point, let's say 238, and then here. It's actually had a pretty big move. Now, the first breakout of a triangle was on 9.5. The second breakout of another triangle was on 10.2. I mean, who's paying attention? Now, if you take a look at this, it's kind of ran up a little bit. Now, I'm not a complete candlestick person. I don't know all the candlesticks. But that looks like an inverted hammer if you think we're actually bouncing off support. Could be a potential shooting star, perhaps, or if you think it's resistance. But if I think it's support, we're probably actually thinking it's an inverted hammer. If we actually go forward to the very next day, this is what technicians really call a close above the high of the low day. Now, remember what I've been trying to really, really, really hit. You got to give me points for trying. Remember, I've been really trying to ingrain, is the price above the shorter term moving average? Yes. When the stock actually has a down day, red candle, how many down days does it have before there's a green candle? Answer, there was one red candle before there was a brand new gold. What does that tell us? Answer, drum roll please. La, 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 la. Okay, momentum. And if it only goes down for a day, that means that investors did not let it drop very much before they wanted to buy some more. Now, why is that? They're chasing the performance. Chasing is not bad. They think that there could be some value, some momentum, and or trend, or all the above. Now, if we actually go back and look at this here today, go forward, there's a little gap on the price. Now, that's the other thing I talk about, is if we actually see closing prices there, and we see gaps in the morning, there was queues of people lined up to buy in the pre-market, perhaps, and right at the open. So much so that they are willing to pay a higher price in the morning than where they were at yesterday's close. That shows some interest at that point in time. Now, I know what you're thinking. Well, how do you know it's going to go higher? You could always say that. You could always say that. Now, if we go back to the analyze for just a moment, and we look at, let's say, the fundamentals, we pull this up. What you're now going to see is, if we take a quick peek, some of the fundamentals on this have not been the greatest in the short term. Slightly up, a little, about 10% up, about 7 or 8% up year over year on earnings per share. But then there's the big drop. My goodness gracious alive. That was a big drop. And what you're now going to notice is, you're going to see in this case is, it wasn't the revenue that struggled. It was the earnings. Now, sometimes businesses can just have expenses. They actually maybe had to spend some of the money that they actually took in for various reasons, and it dropped the earnings per share. Based on what the reaction was on the stock price, a lot of investors maybe did not feel like that was really told, okay? And now they're trying to get the trust back. If the stock is not above the moving average, they don't have a lot of trust in the stock at that moment in time. The stock is above the moving average, there's more trust at that moment in time. So there's been some weakness. Does that weakness last forever? Well, that's what investors kind of, if they can start to see some quarters where all of a sudden it actually starts to go back up again, positive numbers higher than where we've been over the last 2 previous quarters there. They have been, okay? There it was higher than the 2 previous, a little weaker actually there. But if you're actually going to notice, they really want to kind of start seeing quarter over quarter. Do those numbers, do they improve back to where they were before? Now, what I'm going to do is, what's the position in the paper money account? Could we consider adding to the position? Well, the prior position was shares, okay, UNH. You're going to see in this case that it was $351 stock that was purchased, 10 shares. That looks like it's a half position. When were those shares purchased? Answer, 9/23. Now, this kind of looks like it was a half position, okay? That was a half position. Well, where could an add point be? It could be on a breakout, which we saw. It could be on the breakout and or the bounce, which we saw that as well. Let's take the other remaining, let's say 3,500, and let's look and see if we can't add to the position. Now, what I'm going to do is I'm going to go to the trade tab. We're going to type in UNH, okay? And what we're going to do in this case is, we're going to right click on the ask price, buy custom, and we're going to go with OCO bracket. Now, obviously, if you're going to, let's say, buy UNH, you're probably thinking about, wait, I just want to double check something. Am I just buying something like bottom up analysis, or is there an industry group and or sector that's helping me a little bit? Well, you go back to the sector of healthcare, it's had one of the stronger moves that it's had in a while. Think of that as like getting a little tailwind, if you will. Now, so if I actually go back to this, clearly if you actually buy UNH, you think that the healthcare sector might go back up again. Now, if we take a quick look at this, what I'm going to do is going to go back to the pool balls percent dollar amount, I'm going to type in 3,500. That 3,500 is the remaining capital available to enter the position. It's going to be about another 9 shares. So I'm just going to type in 9 shares. That's going to get us to 19 shares total. Okay. Now, when we go back and look at a target on this, where's the target? Where might it try to go up to? Now, we might kind of think, well, it's already gone up so much off the bottom. Okay. But who says it can't go up higher? Well, if we go back and kind of say, look, this is filling in the gap. That's another example of a fill in the gap. It took longer than normal, though. If we go back to kind of where did this really fall down from, probably would say the next level might be 436. And even if we kind of took a halfway point, it's probably going to be right around 409. Okay. Now, for this example, I'm going to play the role of I'm a pessimist, which I usually like to play. And I'm going to put a 409 target. I don't know if it's going to go there. But then as far as the stop to the downside, we're going to use the moving average. I'm going to use the 20-period moving average as a potential support level. I'm using that to try to give some more room that if it were to consolidate or pull back, that we could try to weather that better than setting a stop underneath the shorter term moving average. if we take the moving average, the 20 period, less 2%, it's going to give us 351.34. This is a stock trade, okay? Now, what you're now going to notice is if we take 351.34, adding to the position. Oh, wait. Could maybe this paper money account could have added it maybe 2-3 days ago? Yes. Could it have added the position yesterday near the close of the day? Yes. Could it have actually bought the position on this morning's gap? Yes. Okay. Those were all add points if you're trading technical analysis. This is also a situation where there's been some fundamental weakness, but where there's could be some strength and some investor confidence coming back in. Now, with any trade, you don't know the future. That's why you're setting a stop. Remember, on the stop, it's saying if we go to that price or less, sell it. And what does that mean? What's the danger of the stop? The danger of the stop is it could get filled at a lower price than where the stop is. The stop is a market order. We're going to go confirm and send. Any questions there? Any questions? Mo actually says, JB, why not purchase a blank that covers the healthcare sector? It is quietly rising. No. Well, if this was Friday morning's class where we can talk about that, that would definitely be an option. A lot of investors, what they try to do, Mo, is they try to maybe buy the sector, and they maybe try to buy one or two stocks in the sector. Now, you kind of bring up a very interesting point here, okay? You got to remember, if you buy a sector, there might be, let's say, 50 stocks, okay, in the sector. So let's say, hypothetically, there's 50 stocks. And then, for example, you go out and say, look, I'm going to buy UNH. Now, this is just a question, okay? Would you treat something that's 50 stocks and UNH, would you say, yeah, when I buy both of those potentially, the position size is going to be the same? In other words, if we normally buy $5,000, we'll buy $5,000 here, and we're going to buy $5,000 here. Don't you think that's more risky? Don't you think it's more risky to say I'm going to put $5,000 on one company when if I actually put $5,000 down on something that's 50 shares, 50 stocks in it, doesn't that seem more risky? Okay? So what a lot of investors might do is they say, James, if I'm going to do 5,000 on an individual stock, I'm not going to do 5,000 on 50 stocks. I'm going to maybe double the position because there's built-in diversification. You don't have individual company risk. Sensitivity to certain companies more than others? Yes, on some of those positions. But that's something to kind of think about. So we're not poo-pooing that, okay? We're just saying this class is not for that, but it does bring up the point is, do some investors consider maybe having a bigger allocation if you're buying a grouping of shares? Just want to throw that out there, okay? Now, the one thing what we're going to do is we're going to send that position. Now, the question got brought up by Debbie. Debbie, if we go back to, let's say, UNH, is there an existing target on that already? Let's go back to UNH. If we look at UNH, what do we got? So on the UNH, what we have on the initial position is we have a stop. We don't have a target. Could we consolidate this stop and this stop right there to where it's just 19 shares at the stop and 19 shares at the target? Absolutely. I won't take the time to do that, but sure. Okay, but there is a stop right there. Okay. Now, by the way, could you just move it up just for quickly? Could you move it up to where the other one is? Sure. Send it. And now those stops are sitting right on top of each other. Okay. Now, Debbie, if we had like, an hour, 30 minutes, let's quickly move that, just a stop. But I think we get the picture. I agree with you there. Now, the other comment came from, let's go back to something just real quick. When we look at the sectors, okay? Now, what I'm going to do is I'm going to pull up the sectors for just a moment, and I'm going to pull up this list and kind of see what do we have here. Now, the SOX percentage-wise is still leading. All of a sudden, we saw gold that just hit 4,000. It was almost at 4,100 this morning. Who was watching? Okay. I mean, we just hit 4,000. you're going to see that technology is still there. Basic materials getting a push. There's the transports. Of course, if you see transports, there's the industrials. Now, you're begging to say, look, if we have the industrials going up, what is leading that charge? So if we pulled up a list of, let's say, industrial stocks, which could be actually driving. Now, just let's quickly go down the left-hand side. We know that one of the industrial stocks is Caterpillar. Now, I don't plan to trade Caterpillar, at least today, okay? But you're going to see that this ran up, blew through the Fibonacci extension targets, ran up to a brand new high, little pullback to the 261 extension, and then getting a little bounce here as well. Interesting. Again, very difficult to get a recession in the stock market if actually Caterpillar's hitting new highs. Okay? Now, the one that I do want to talk about, I want to bring up just real quick the NVIDIA for just a moment. Now, this week, we had a small company called AMD that got a boost in potential revenue of $100 billion? Check me on that. Was it 100 million or 100 billion? You get past 100 million, it just kind of seems like just three more zeros. I mean, who's counting? Now, the biggest actually thing is if you look at, let's say, AMD, it gapped to the upside. Some investors sold it on the big, massive gap. I think it was 37% day over day. It consolidated a little bit yesterday, but was higher than the previous day. Today it gapped and then it rallied from the open price. What we've been saying for, let's say, 2 weeks? Could NVIDIA kind of move up more in line with the group? Now, we know that for a while it was NVIDIA leading to the upside. And then we actually saw stocks like Micron, okay, Clack, okay, you name it, move to the upside among others. But what we're trying to kind of show the example of playing something that's maybe a little bit of a lagger. Now, it could be a lagger for a reason, okay? Now, we went over the fundamentals of this last week, but when you take a look at this, what I want us to kind of notice is this is trying to get a little bounce back to the upside. The 20-period moving average has stayed green. What has been red is the 10-period moving average. And that 10-period moving average has been red. Now, what would cause it to actually not be red? Well, really what we could actually see is the 10-period moving average going green again. Now, we're going to try to play a potential flag trade on this. The last time that this recent up move, okay, we kind of ran up and then we fell back down. And where we started this up move was about right there recently. When I look for a flag pull, I'm really looking for about 5 to 7 trading days. That is your average flag. Could it be less? Maybe. Could it be more? Maybe. But the average is that 5 to 7 days. Of the 5 to 7 days, you tend to see 1 or 2 days where there might be red candles, but predominantly you're seeing more green candles than red, hence the pull. The pull is the price appreciation. Now, when we actually pull back, those flags might just be 1, 2, 3 days. If we're really kind of getting more of a flag, it could actually probably be, let's say, on average, 3 to 10 days. If we're saying this a little bit more of a, think of this as like a momentum pullback, okay? This momentum. If you actually kind of get, let's say, a 3 to 10 day pullback, okay, that is kind of more your classic shorter term pullback. So when we say 3, we're saying a half week. When we say 10, we're saying really 2 weeks or so. And then after we get maybe, let's say, up to, let's say, hypothetically 10 days, this is when you're able to start to see where the diagonal line of resistance is. Very difficult to actually see really resistance in only a 1 to 2, 3 day pullback. Very difficult. Now, can we see a diagonal line? Now, by the way, when you draw the diagonal line, how are you drawing it? We're nicking the top rights of the candles, okay? If the price actually starts to get above that, you're starting to actually kind of see the price push. Now, when we actually go back to this, let's go back to this on the weekly chart. The reason why I'm kind of referencing a fleet is if you pull this back up and you look at this on a weekly chart and you take a look at this. Now, I know a lot of us are saying, James, I wish I could go back to April. Well, that's why you're kind of like consistent versus taking breaks. You're always monitoring. How can we see the intermediate flag? Well, the flag is the orange color candles or orange or purple color candles. Now remember, orange, shallow pullback. Okay? If you had orange and purple color candles, shallower pullback. Okay? If we had orange, purple, red candles, take your guess. Okay? The guess is that's a deeper pullback. Exactly. Now, if you said, what would you like to see? Well, I think many investors would like to see just orange only, okay? But if you get purple, it doesn't necessarily mean it's horrible. It just means it slipped down below the 10-period moving average. Now, what I'm going to do in this case is we're going to come back to this, and we're going to kind of speculate, could this try to go higher, okay? Now, if we measure this from here to here, I'm going from body to body. If you go from wick to wick, you're going to get more extreme measurements, okay? Which means it might not get there, okay? And if we went from body to body, I'm going to go from the lowest body up to maybe where it might try to travel. This right there is just the duplication of this. That's all it is, okay? Now, here's the deal. We're going to right click. Now, by the way, this kind of nice thing about a flag, like a new one, is you're going to see that this pullback area provides like a nice higher low level. And what we're going to do is we're going to take 184, 98, set a stop, less 2%, and we're going to put a target right up there. How fast can we do it? Answer? Well, let's pull it up. Now, I'm going to go back to the paper money count. We're going to right click on the chart. Okay, and what we're now going to do is buy custom with OCO bracket. When we talk about position size, we're going to take about 7,000 capital. 7,000 or so is going to be the max, or the kind of right in the mid of what could be allowed. It's going to be about 37 shares of stock. Wished everything was 100, but sometimes you don't have the portfolio at that moment in time. 37 shares. What was the target again? Well, the target is, let's go back to kind of that chart, was right about 200. Now, some people kind of say 200 or even numbers could be resistance. I just hate it when, I'll just leave it at that. Okay. Now, we think that a number is going to be resistance. I mean, what's another? If I say I'm going to put a target at 199.50, why does it matter if it hits 200? It might not, okay? I think a lot of times that's speculation in our mind that 200 is a big number. To who? To who? Okay? Now, if we go back to data GTC, what I'm now going to do is going to go back to that stop. And that stop we actually saw before, which is 184.98 less 2%. And that's going to be, what's the number? And I got to take that off because I typed it in slightly wrong. There it is. 181.28. Okay? 181.28. I'm just going to put that right there. 181.28. Okay? So second trade that we're doing in this case is we're buying shares of NVIDIA thinking that the group might drag it up. This has also been something that had a horizontal area of resistance. It's also been something that if we go back and say, could this be something that is checked back down right to support, and is it starting to bounce? Now, you might say, I'm not going to put on the whole position here. I want to see it kind of get above, might add to the position. Fine, practice it. That's what paper money accounts for. We're going to go confirm and send. Entry, target, stop. We talked about how those stops work. The risk with stops, it could fill at a lower price. Send the order. Now, if we go back, Ocean Life actually says, TSM. Cameron, thank you for answering those questions. TSM, if you go back to this. So TSM, comment from Ocean Life was TSM used to be at 200. Now it's at 300. Okay. Now, if we go back to this, okay, and we go back to analyze for just a moment, let's go here, TSM, okay. If you kind of look at this, kind of take a look at what's going on, pull this back up, these numbers have been unbelievable, okay. So here's COVID. Now, by the way, this number, you might say, well, this is just chump change. That's really not that great year over year. Well, that's not necessarily true. If we're talking about earnings per share, anytime you get double-digit % growth, that's not chump change, okay? If we went to 82 cents and we were at 70 cents, year over year, earnings per share increased 17% in COVID from 2020 to 2021. That's not a small amount, okay? Now, we could kind of do the math in our head here. If we went from 82 cents to 125, that's like almost a 50% jump. Now, sometimes you can actually have kind of products that hit the market and a lot of people buy them, okay? And you can kind of see sometimes where, hey, things cool off a little bit and people have already purchased and they're waiting for something new to come out. And that's what you saw from 22 to 23 that dropped, but a big jump from 23 to 24. Now, how can it do that? Well, sometimes you actually get companies that actually get other companies under contract to buy their product. And so these big jumps in, let's say, from 272 to 340, which is also a big jump, that's like 25% in revenue, it's the contracts. Why do they want the contracts? Well, because they spread the contracts out over the life of they spread the revenue out over the life of the contract and actually make it kind of accounting-wise a little smoother, okay? And it's easier to kind of show how the P&L is working over time, profit loss, okay? Now, so kind of interesting. So Taiwan has actually been another one that's actually done that. Now, I want to go back. I want to kind of fast fire through a couple stocks. We talked about, so trade number one we actually did was UNH. Second one we actually did was NVIDIA, okay? Third one we're just going to take a quick peek at is Cisco. Now, Cisco, if we kind of went back and look at this, it's been choppy. It's been choppy. I'm going to go back to this chart, which kind of shows us, let's go back to the weekly. Whenever you're kind of wondering about what is going on, I need to see a little clearer view. Boy, that weekly chart's nice. Here we actually have a little move to the upside, and there's been a little consolidation. Now, notice in this consolidation, it's only orange and purple color candles. When there's a little bit deeper pullback, you guessed it, there comes the red nasty candles. Red ones just mean prices fell down below both moving averages, and it's probably causing a lot of pain. Okay, not nice. Don't want to go there. Now, this has been a shallow pullback based on what we've kind of been talking about. Shallow pullback, orange color candles, shallower, okay, a little bit deeper pullback, purple, it's there. But did it really create a base of support? We'd have to say yes. Now, a lot of people say, oh, there's earnings coming up. There's earnings coming up. So, could that actually cause some speculation? Now, when there's something in the future, people might trade towards that expectation. Do they think the earnings is going to be good and so on? If I go back to the daily chart, this is kind of where we're seeing if I were to draw a line and I was going to kind of circle the highs, okay, highs, way high, lots more highs, and what you're now going to see is highs again. So whenever we do this, we're trying to say, can I draw a diagonal line or is it more horizontal? So if I drew a diagonal line, how many lines could I touch? Not many. If I drew a horizontal line, I could probably get to a couple. If I draw a horizontal line, I'm coming through about 4 of those areas that are hitting dead perfectly on those ovals, which signify the highs. Multiple highs, resistance. Not resistance, resistance. Now, what you're now going to notice is, let's say the investor said, James, I want to kind of maybe play a breakout, thinking that actually Cisco might kind of come more in line with some of these other tech stocks. If I went to, let's say, the analyze fundamentals, we pull up the fundamentals, what you're now going to see is the fundamentals, they have not been smashing higher. Now, we cannot say here they've been nothing. They have not been as outstanding as some of those other semiconductor companies. Okay. So you're going to see that over year, slightly down, higher than the previous year, higher than the previous year, higher than the previous year. And when you look at these numbers right here, the earnings per share has been kind of more consistent. Now, that's not all bad. Now, I know, you're always thinking, I always want something higher. But sometimes you're looking for companies that in just different types of environments, that they're able to produce sales and earnings per share. Now, what you're now going to see is what type of businesses do they do? They're delivering connectivity to campuses, data center, branch networks, WebEx, and communication platforms, service software, licenses, subscriptions. Did you say revenue? Yes. And so this is hardware, network assurance, monitoring and analytics. I mean, do you think people probably need this in the future? Pretty good chance, okay? Now, let's go back to this. And what I'm going to do is I'm going to right-click on this chart. Now, does every trade need to have actually a target? No. But if we went back and actually said on a 3-year weekly, is there a way to get a measurement? Wonder if you wanted to have a target on everything. Well, whenever you have a flag like this, you might say, James, I was kind of thinking about going from resistance, okay, down to where this kind of the flag started, body to body. And if we actually said, where might it try? We don't know if it's going to go there. It would be right about 79.23. Now, yeah, I know. We said to watch Dell. I admit that, okay? And Dell today, you probably don't think, kind of funny. So what happens is I do post. So when I'm looking at the markets, I post on X, okay? And so I did kind of mention that as well. So I don't want you to think that, we didn't mention that. It's examples, not a recommendation. But you're right. Some of these companies that kind of do something similar to maybe Cisco, Dell, big pop, okay, here today on Dell. And that was kind of like the class that we talked about from last week. The reason why we kind of talked about cup and handles, bounces, breakout setups, the class from last week is we saw a lot of those patterns setting up, okay? And Dell was just another one that kind of had that cup, already had the handle, and it just went doink, okay? So more of the story is when we go back to, let's say, but I agree with you. It'd be nice if we could talk about that one too. I'm going to go back to the Cisco example. Let's pull that up, Cisco. Let's look at the numbers there. We'll type this in quickly. We'll button this up. So the price level that we actually have is 69.20. 69.20. And actually, prices, well, I think my price was off. Okay, so there it is. Okay. Now what I'm going to do is I'm going to type in 79-ish dollars for the target, data GTC. And then what I'm going to do as far as underneath, as far as the support, we're going to try to set the stop like underneath the 30-period moving average. That 30-period moving average, 67.95 less 2%. It's going to give us 66.62. Okay. So if I type in 66.62, we're going to put that right there. Now, the number of shares, we're going to leave it at where we are. It's not too much to buy 100 shares. And we're going to go to data GTC. So trade number one we actually did was UNH. Trade number two we did was United Healthcare. United Healthcare, one. NVIDIA, number two. And then Cisco, number three. Okay? Now, as I wrap this up, any other thing to watch maybe? Okay? Well, I go back to AMD. A lot of us might think, well, AMD is already too high. To who? Okay, to who? The other one that we're going to keep an eye on is Boeing. Mention this kind of each day here. Boeing kind of said, we got a bounce in the last couple of days. There's a bounce, but now it's kind of getting inside the old channel. Keep an eye on that, okay? The other one that I actually kind of keep an eye on is Microsoft. Could this be the trigger day on it to get a gap tomorrow? That's another one to watch. The other thing we're going to actually kind of keep an eye on, probably the other one that we're going to make mention of, as we brought up, let's say Dell, Cisco, is ANET, which has had a consolidation and a fresh, brand new hold on that as well. So there you go. Now, I'm out of my time here today. I want to say thanks to Cameron for answering those questions in chat. Also, quick reminder that coming up next, if we go right down to the lineup for today, we got managing an option portfolio, trading price patterns, getting started with Thinkorswim. Ours truly, Cameron May will be on coming up in a little bit, so join them. Stay tuned for our next session coming up right at the top of the hour. Remember, with what we discussed, it was done for example, illustrative purposes only. We're practicing trading these trends in the paper money account and practice alongside with us in the paper money account to learn. Now, remember with what we said, all examples were done understanding that investing has risk, and this has been the class on trading growth and value stocks. Stay tuned for Brent Morse coming up next. Bye-bye.